Well, good morning, everyone, or good afternoon to those in Eastern time zone. My name is Josh Davidson. I am a CPA that helps construction companies with anything accounting, tax, um, or advisory related. So today I wanted to go over choosing the best entity for your construction company. So I will pull up my screen here and we will get started. Um, oh, what's going on? Where are? Oh, sorry, I'm having some technical difficulties here. I cannot get my notes up here. There we go. Okay, so talking about choosing the best entity for your construction company. As I said, my name is Josh Davidson. I am a CPA that works with construction business owners, real estate developers, real estate investors, but primarily construction business owners. So, what we're going to be going over today are the benefits of forming a legal entity, why you actually want to form one. We're going to compare the different entity types. We're going to talk about where to form your LLC or if you choose a different entity type. And then going over some administrative tips for managing your LLC overall, just from some of my experience. Okay, so benefits of forming a legal entity. The first and biggest one is that you're giving yourselves limited liability protection. So what that means is that your personal assets are going to be protected from any business debts or liabilities. So, in the instance that something happens in your construction company, there's an injury or some other legal matter that comes up, instead of the damaged party going to you and trying to sue you directly, they'll be suing a company. And essentially, all that you can lose when you set up a company is what the company owns. So, uh, your personal assets, such as your home, your car, your bank accounts on a personal level, are protected in most cases. There's a few use cases where that may not actually be the case. They do what's calling piercing the corporate veil, but I can talk about that a little bit more further. Um, Some of these entities can also give you really good tax flexibility. So choosing the best tax structure, whether it's pass through taxation through an S corp um, or LLCs, they can provide you with a lot of flexibility when it comes to the taxes and operationally as well. Which brings me to operational simplicity. Some of these entities will give you easier management with and fewer formalities than some other companies might. Um, it's easier to also have a clearly defined ownership and control of the company. You'll have everything written into the articles of incorporation and into your operating summary. I'm sorry, what's the name slipping me? Uh, your operation, your operational documents will will show exactly who owns what, who's in charge of what, and what powers they have. For instance, you can dictate which owners of the company have the power to open up a bank account or um, sign a tax return, sign into contracts, and things like that. Um, Forming a legal entity can also give you access to capital. So, and if you are looking to get a loan or you're looking to bring on investors, having a legal entity set up is really what makes that possible. Investors don't want to just give you money yourself um, because they don't know that you won't just run off with it and take their money and run. Having a legal entity set up, it makes it easier to dictate the rules of the investment and what you can actually do with that money. Um, and it also will give you enhanced credibility with your vendors and with your partners. Going to a vendor and saying, hey, I'm John Smith and I just want to buy some equipment and and I'm going to build a house with it versus, you know, Smith Enterprises Corporation. They know that there's a legal entity set up. They know that there's legal processes in place. Um, and it just gives you that added sense of credibility to be able to work with somebody. All right, so let's talk about the various entity types that you could choose. The simplest one is a sole proprietorship. Um, Essentially, it has a very simple setup because there's basically no setup. A sole proprietorship happens when you are just acting on your own behalf. So an easy example is, let's say, you decided to make candles out of your house and you wanted to just sell them on the side. That technically is a sole proprietorship. You are the only person who is operating that entity, if you will, even though you don't have a legal entity set up, and you are doing operations underneath that umbrella of the sole proprietorship. Um, and So it's very, very simple to set up. You can pretty much just start going into business. You have direct control over all of the decisions because it's just you that's actually making those decisions. And for tax filing purposes, the reporting is much, much simpler. It just goes on to your 1040 to your 1040 individual tax return onto Schedule C. So you don't have to file an extra, partnership or business, partnership or corporate tax return or S corp tax return. Um, there are definitely cons to it. So doing it this way, you have no liability protection. So as we were talking about, if you don't have an actual legal entity set up and filed, you have no liability protection. If somebody chooses to sue you, if one of your candles in this situation that you sold to somebody burned their house down, they could sue you personally and potentially take everything that you own. There's also very limited growth potential. You're not going to be able to find somebody to give you money if to raise to increase your sales or to buy equipment, other than going out and getting personal funds and loans from a bank, uh, the same as you would for, a regular personal credit card or personal loan. There's also sustainability issues. If something happens to you as the only owner, the operations in the company stop. So there won't be any continuity with being able to continue that business operating. Now let's talk about a partnership. So a pro of the partnership is that you have shared responsibilities. So you and somebody else can go into business together. You can form this company and you end up sharing the workload and the financial obligations. You also get a combination of resources. So whether you're combining um, two people together in a partnership, or you're connecting two businesses together in a partnership, you have a pooling of your skills, your knowledge, and your actual capital that you can use to infuse into your business projects. So you really get the benefit. It's essentially like a marriage of businesses or a marriage of partners. Um, there's also tax benefits. Uh, Setting up a partnership versus some of the other more complicated um, entity types. So one of the benefits are that profits are passed through to the partners and reported on their personal tax return. And what that means is it will come through in a very similar way to the sole proprietorship, where you are only paying tax on your share of the income, or getting the benefit of your share of the losses from the partnership on your personal tax return. The business itself doesn't pay any taxes. Everything is what they call pass through to you that you then will pick up on your personal tax return, um, and get credit for during that process. But you will have to file a separate partnership tax return, which will then generate something called a Schedule K1, which is your pro rata share of your income and expense items. And that's what your accountant or CPA will use to pick up that information on your personal tax return. So some of the cons to this are in the same way that you have shared responsibility as a pro, you also have shared liability. So you are personally liable for the business debts and actions of the other partners. So while the partnership does set up a separate legal entity, a lot of times your liability is still unlimited. Now entities, there are special entities that you can set up, such as a limited liability partnership, which limits some of the activities of the company and some of the activities of the partners themselves, but it does also limit the liability of the company itself. Um, Another con is that there can actually be potential for conflict between the owners of the company. So any disagreements between the partners can obviously disrupt business operations and they could stop them entirely. If you have one partner that gets completely disinterested in continuing the business, um, the other the other partner may be on the hook for continuing the business without the help of the other and without the benefits of the other, but still being liable for any of their liabilities or obligated to pay them out their portion of the income as well. There's also the joint tax responsibility. So, as I had mentioned before, you will have a separate business tax return that needs to be filed for the partnerships. Um, they must obviously be filed accurately, and any errors on the tax return impacts all parties. Now let's talk about a corporation. So when people talk about corporations, really what they're talking about are C corporations. That's what most people are familiar with. And any almost all of the companies that are traded on the stock exchange, they are set up as C corporations that issue stock to shareholders. So the biggest pro of a corporation is that it is the most airtight legal entity for setting up um, it's the most airtight legal entity for liability protection. I'm sure you've heard stories of these, CEOs or CFOs um, really taking bad actions, resulting, actions that result in damages for shareholders, damages for users of their products, and nothing ends up happening to them. The company itself just gets a big fine. Um, that's usually what happens in these cases, and that's because corporations have very, very strong liability protection. They're very strong in protecting your liability, your personal liability for any business debts. Now, there are certain cases where they can do what's called piercing the corporate veil, and those cases are usually large levels of fraud within a company that can specifically be linked to one person. So there are cases that you will find where the CEO or CFO does end up going to jail and ends up being personally responsible for damages. Those cases are rare, um, but they can still happen. Another pro of C corporations is it really gives you the opportunity for the easiest capital accumulation. So what that means is you will likely find it's easiest to raise money from loans, very easy to raise money from shareholders by issuing and selling stock. And it gives somebody an easy way to know how much of the company they own, what their value is worth, and it's easily transferable. Corporations also provide you with perpetual existence. And so what that means is regardless of the changes in the ownership or the management, the business will continue. So it essentially becomes its own, not just legal entity, but it becomes its own entity itself that can continue living past the ownership of its management. So that's where you can have companies that have been around for more than 100 years Obviously, they haven't had the same owners for more than 100 years, but those businesses still continue. And that is because the ownership is very easy to transfer because of the stock transfers. Now, some of the cons to the C corporation are that it is the most complex setup. It's much more costly to set up. It's more complicated. You have to deal with a lot more regulatory requirements. Um, and in addition to that, on an ongoing basis, you're subject to more regulatory requirements as well. So you need to have documented board meetings. You need to keep the minutes from those meetings. You have to have a certain amount per year. Um, Basically, everything needs to be tracked and documented, which isn't too bad when you're at a large level and you have people that can do that. If you are at a smaller level, if you're less than 5 or 10 million in revenues and you may not have your entire team fully built out, uh, this is definitely something that can be very cumbersome. The other issue is that corporations have double taxation. Now, what that means is the corporation itself is taxed. So right now, the corporate tax rate is 21%. So all of the corporation's net income is taxed at 21%. Now, if you were a shareholder, after that money is taxed and you decide to take some of the money out, that money comes out to you as dividends, which then you will pay tax on your personal tax return. And so that's what they classify as double taxation. The entity itself is taxed, and then you as an individual are taxed. Um, Lastly, as I said, for the some of the cons is those stringent formalities. So you have many corporate formalities like annual meetings, maintaining detailed records, and those other items that I mentioned. You also have to file a separate tax return as well, which is the Form 1120, which is a corporate tax return. Okay, now I want to talk about S corporations. If you've kind of been tuning out for the rest of the time, I would advise you to really pay attention here because most of the time, the construction companies that I'm speaking with, they end up being set up as S corporations. So, what is an S corporation? Um, Firstly, an S corporation is not technically a legal entity, it is a tax entity. So, what that means is you can have either an LLC or a C corporation that you've set up that you then make what's called an S election for. So, you elect to have it taxed as an S corporation. So, what does that actually do for you? Um, well, the pros in general are when you set it up initially as an LLC or a C corporation, you're going to get that limited liability um, for your personal protection. If you have it set up as an LLC, um, the administrative, setup um, is much easier in the beginning than it would be, for starting a C corporation. Um, but when you make the S corp election, it allows you to get the pass-through taxation just like a partnership or a sole proprietorship would have. So if you were a C corporation where you were getting double taxation, you can switch to an S corporation and you would only have that one level of tax. The other benefit to it, the biggest benefit to it really is the self-employment tax savings. So when you are a limited liability company, an LLC, or your sole proprietorship, any income that you receive, you end up paying self-employment tax on. What self-employment tax is it is the employer's portion and the employee's portion of Medicare, Social Security, FICA taxes, as they call them. Um, and there's no limit to that. There are limitations um, for how much you actually have to pay into Social Security for income, but for Medicare there is no limit. And what an S corporation allows you to do is pay yourself a portion of your income as wages, which you then can take as an expense from the S corporation. And the remaining income that you have left in the S corporation is not subject to the self-employment taxes. So what does that look like practically? So most of the time, um, there's a rule of thumb that accountants like to use, which is a 60-40 rule, which says that 60% of your net income as an S corporation should be taken as wages, and then 40% can be taken as distributions. So to give an example, if you were an LLC that had $100,000 in net income, you would receive that $100,000 for your personal tax return. And on your personal tax return, you would pay self-employment tax on $100,000. And the self-employment tax rate is 15.3%. So you pay roughly 15,000 in your self-employment tax. Now, for an S corporation, if you went with the 60-40 rule, 60% of your income would be would be given to you as wages. Now, normally, when you're given wages on a regular W-2 job, payroll taxes are taken out. They're taken out on the employer's side, and they're taken out on the employee's side. So you're not technically getting charged the self-employment tax, but the amount of tax you're paying is the same on that 60% of income. So $60,000 would have 15.3% of tax against it. Now, the other 40% or the other $40,000 would come to you without any payroll tax applied to it. So you would receive $40,000 without having to pay into Social Security, Medicare, um, or unemployment. Um, and you would just pay your regular income tax on that amount. So it is definitely a cost savings, and it could be pretty substantial depending on your income level. And it's essentially just for filing a form with the IRS saying, "Hey, I'm going to be an S corporation." So what are some of the cons to it? So there are some administrative requirements that are a little bit more complex than just setting up an LLC. There are some reporting requirements like a C corp has, but overall, in my opinion, the most strategic way to set this up is to do an LLC with an S corp election, opposed to a C corp with an S corp election. There are also ownership restrictions. So a corporation or a partnership can be owned by any legal entity. It can be owned by somebody personally. It can be owned by a partnership. It can be owned by another corporation, etc. But S corporations can only be owned by individual shareholders. They have to be U.S. citizens or residents. You can only issue one class of stock, and you're also limited to 100 shareholders. So if you had a partnership that invested into your S corp, or you had a C corporation that invested into your S corp, you would automatically lose S corporation status. You wouldn't be able to reapply for S corporation status for, I believe, 5 years, and you lose any of the benefits to it. So, kind of as I was mentioning here, you have to meet that IRS's scrutiny, their additional requirements, and adhere to those operational rules to maintain that S corp status. And I did touch on this, but your traditional LLC, what's the benefit of it? So you've got limited liability, you have tax flexibility, operational simplicity, flexible management. LLCs are essentially the easiest way to set up a business. An LLC can be set up for somebody who has just one member, or two or more members. If you are operating as a sole proprietorship, but you want extra legal protection, you would set up an LLC and name yourself as the only member of it. And what would happen with that is, tax purposes, you would be considered a single member LLC. So you wouldn't have to file an extra tax return. You would, tax wise, you would report it the same way as a sole proprietorship, where you would just pick it up on your personal tax return, on your Schedule C, but you have that extra level of legal protection. So if somebody chose to sue you for some reason, they would be suing your company and not you. So the most that you could lose in that scenario is whatever the LLC owns. So maybe if you purchased inventory or equipment under the LLC, you may be um, that may be at risk of loss, but your personal assets like your house, your car, personal bank accounts, those wouldn't be affected. Um, and as far as the tax flexibility, however you write up the rules, um, your articles of incorporation, your operational agreement, uh, however you write them is really how the business will be operated. So it's much more flexible than, setting up a C corporation. Um, and as far as the management, the the owners of an LLC are called members. So you can have all of the members own the company, or you can appoint managers. So you would have it as a manager um, manager controlled LLC. Some of the cons, as I mentioned before, you would have to pay the self-employment tax. Unless you are making the S corp election, you would pay full self-employment taxes on the entire amount. There's also varying LLC regulations by state, which can complicate multi-state operations. And then there is less case law with LLCs specifically than there would be for C corporations. Most of the C corporations are set up in Delaware, and that is because Delaware has over 100 years of legal precedent, specifically set up for C corporations. So there's a lot of case law um, to go off of when you're trying to make a decision in court. So then, where should you actually form your company? So should you form it in your home state, or should you form it in another state? Generally, what I would recommend is forming your entity or having somebody form the entity for you in your home state if your operations are mainly or entirely in your own home state. um, Filing in your home state is generally simpler. Um, However, there are some very popular states for LLC formation. Um, Delaware is popular, has very business-friendly laws and allows you to have flexible management. Um, the downside to Delaware really is that um, you have to file it paper. So you need to physically file the paper forms via mail uh, to Delaware, and it usually takes a week or two for your documentation to come back. So it's a little bit cumbersome, and not quite as friendly for setup, and it has the highest fees of these, popular LLC states. Nevada has no state income tax and has very strong privacy protections, but you're only getting the benefit of the no state income tax if you're operating in that state. You're still going to pay tax anywhere that your business is operating, and you're going to pay income tax on the income that you're generating in those states. And then lastly, Wyoming. Wyoming is a very good option. Very similar to Delaware in a lot of the setup. Um, there are low fees and has very strong asset protection. There's also a fair bit of privacy protections as well. But there are some added things with Wyoming. You do have to pay for a registered agent to actually go onto your formation documents, which is an additional cost. But overall, my recommendation would be to file in Wyoming. The fees are low enough where it makes sense. For instance, Delaware has it's $110 to form the company. You have to pay $75 for a business license, and then you have to pay $300 a year for your annual franchise tax. Nevada is $250 to form, and then you have $150 a year that you need to keep renewing. Wyoming is $100 to form. It's $60 annually and $49 for a registered agent. Typically, I mean, the registered agent fees do vary, but typically it's $49 for a registered agent, and that is on a recurring annual basis. So overall, the fees end up being lower. The benefit, why I like Wyoming is you can file it online as well, so it doesn't take too long, and you get your business formed very quickly. So just want to talk about some administrative tips for managing your company as well. Once you have your company set up, um, you can go and set up a business bank account. Now, I recommend setting it up immediately. You don't have to get any complicated business account. Start out with the lowest level that you need. Um, a lot of times, you can start out with the most basic level, and some of these banks, as your transactions go over the limit for your account, sometimes they'll automatically upgrade you um, to the next level of account. Um, or you can just call in and ask them to upgrade the account if you're going over that limit. And most of the time they'll waive any fees for excess transactions. What you want to do though is why it's important is you want to separate out your business and your personal expenses. So all of your business expenses you want to put through that bank account and not mix them with your personal bank accounts at all. So really what you'll need to do is just bring all your formation documents into the bank, your EIN, your LLC documentation, and an ID, and they should be able to walk you through the entire process. Um, Next, I would get a really good keeping system down, whether, if you have experience in Excel and you wanted to build out, a bookkeeping process in Excel, that's perfectly fine at the smaller level. If you're having, a lot of transactions per month, it's going to be very cumbersome just dealing with Excel. So I would recommend QuickBooks Online or Zero for easy tracking. I like to use QuickBooks Online. I think it has all the capabilities that you would need up to a certain level. Um, but having something like this allows you to have regular financial reviews and reconciliations. So you're making sure that all your documentation, I'm sorry, all of your transactions are coming through properly. You're keeping track of all them and you're not losing out on some business expenses that you could be taking advantage of. I mean, if you have business expenses, you want to be able to take them as a deduction for your taxes. Um, if you don't feel comfortable doing it yourself, hiring a professional bookkeeping service to ensure the accuracy and compliance is going to be key. Also, it's just something else for you to worry about while you're trying to build your construction business or optimize your processes. Hiring someone for bookkeeping is one of the easiest ways to optimize everything. Um, Now, what you're going to want to do as well is do some comprehensive tax planning and compliance. You may find that you need to pay in some estimated tax payments to avoid any penalties. Um, if your business, once your business is set up, you may not you may not be thinking about the taxes you may have to pay in, on an ongoing basis. That self-employment tax, I can't even tell you how many times I've seen that surprise somebody. Um, and they realize they have a tax bill at the end of the year that they weren't expecting because they've been spending all the money that they've been getting because they thought taxes had been taken out, or they thought they weren't going to have to pay taxes. So tax going through a tax planning consultation really help to avoid those issues. You can estimate how much money you're going to be making throughout the year, what your net income is going to be. You can see um, how much tax has been paid in over the course of the year and see if you have enough paid in, or you need to actually pay more. So consult a tax advisor that can help you with this. And you can also plan for maximizing your deductions and credits. Once the tax year is done, most people think that a tax preparer or CPA can work their magic at the end of the year, and that's just not the case. Where they work the magic is before the end of the year, helping you plan for the rest of the year or plan for the next year on how to optimize your taxes. Um, all they can do going back is make sure that the information is correct. But if you haven't paid money into your taxes, if you haven't kept good records, um, it's there's not too much we can do. Um, and so that also brings me to maintaining your compliance with the company. Make sure that you're filing your annual reports and your fees with the state so that your business stays active. Keep accurate records of any meetings and any major decisions. Even just having something written down, in a Word document with a date next to it is much more substantial than having nothing. And review any necessary licenses and permits, making sure that they're all up to date so that you're not surprised on a job um, with your business license or your contractor's license expiring without you knowing. If you'd like to work with us, as I said in the beginning, I'm a CPA that works with construction companies. So we're working with companies that are $1 million or more in gross revenues. If you don't know what your gross revenue is right now, feel free to still book a call with me. That's something that I could help you to figure out. We could do a cleanup project, get everything up to date. Going back in time, we can go over, we can hook up your bank account, or we can download the transactions or look at the statements, get everything gathered together, get everything integrated with QuickBooks or Excel, and see where you're sitting with revenue, and then take a look at your profitability, your cash flow, and do what we can to optimize processes. So most of what I do is helping you with job costing, with cash flow, profitability analysis, doing fully outsourced accounting, um, and going through QuickBooks Online cleanup projects. We also have capabilities of doing personal and business tax returns. So really, anything that you would need, um, I'll be able to handle for you. It's my passion to help construction companies grow. That's why I started this business. Um, I worked a little bit in construction in college. I've recently worked on a construction project on a personal investment of mine, um, and really just developed a passion for working with contractors, people in the real estate space, and wanting to help them optimize everything. So, if you'd like to book a meeting, please go to joshdavidsonCPA.com/book. And my calendar's up to date. So just find a time that works for you, and I'll be able to start there. Um, if you would like to connect with me, feel free to go to LinkedIn. My company is called Stag Advisors, and the link to my company page is there. If you'd like to find me personally, all my information is there. Feel free to email me. Feel free to call me. My phone number there, 304-413-7824. That is my cell phone. So if you work best over text, uh, that's perfectly fine. I am a millennial, so I I'm adept at texting, and phone calls obviously are much more personal. So feel free to give me a call. And that's all I've got today. So thank you for joining, and I hope to speak with you soon. Thanks.